And our next guest is positioning himself in the short end of the yield curve to avoid those debt sustainability concerns in the long end. Erik Knutzen is Neuberger Berman's co-CIO of multi-asset strategies. Why be in any end, Erik? Why not just stay away from the whole thing?
Well, we do have to put our clients' money to work. And actually, I was delighted with that conversation because I figured this was all going to be about the election. But I think that you're really addressing perhaps the more important issues, which investors should consider whoever wins next week. And that is that both candidates are talking about continuing to spend. Both candidates are going to see the debt levels increase. And so a key element that we think will drive markets, certainly in 2025, will be the bond market beginning to focus on debt sustainability concerns and an increase in term premium. And we don't think that that is fully priced yet. And so we're likely to see bond yields and certainly the term premium component continue to rise after we get through whatever resolution of the election, transpires. And that's going to be an important driver in 2025. Bond market volatility can lead to stock market volatility. And so that volatile environment we've been in, we think persists into next year. You do think it persists? Because I could certainly see a case for, hey, it's gotten pretty bad in the last couple of sessions. And by the time you get to the election, is it a kind of by the results event where the certainty of what's happened, even if it's a red sweep or what have you, kind of brings the reality element in where right now people may just be getting carried away with the what ifs? Yeah, we do think that the markets have priced a certain outcome. We're, at Neuberger, first of all, we have no insight on calling elections, but we would still characterize this as a coin toss. We're not ready to say there's a specific outcome. Meanwhile, betting markets and markets have really leaned into the notion of a Trump victory, whether that's a red sweep or a Trump with a divided government. And so we would say if that's the outcome, and we're building scenarios now for how to implement in client portfolios, if that's the outcome, then we would fade a lot of the positioning, that's happened in advance of a Trump win. If it goes the other way and there's a Harris win, there's going to be a lot of movement and there's going to be an opportunity to buy in and add exposures to kind of the Harris basket of winners in the market. And then there's the what if we don't get a resolution for an extended period? That's going to be more volatility. That's where we want to have good diversification. It's back to kind of diversification first principles, but we also want to have exposure to areas like gold.
Well, that's exactly. What do you make of these movements in the dollar, in gold, in Bitcoin, and all of these assets? I mean, you could even argue it's not great, but if you believe that in some ways what we're witnessing is dollar weakness against Bitcoin and against gold, then the strong stock market, the NASDAQ hitting a new high, is also unfortunately the flip side of that. I mean, it is priced in dollars after all. So there's kind of the good reason and sometimes the less encouraging reason why stocks could be rising.
Yeah, and the dollar has been part of this basket of Trump trades that the Trump will lead to more inflation, higher interest rates, higher term premium, therefore the dollar will be more expensive. When you look at 2016 and 17, the dollar did rally through the end of the year after the surprise win of Trump in 2016, but the dollar declined in value through 2017, when Trump was enacting the policies that were supposedly going to be more inflationary and cause higher interest rates. And so I don't think you can just play a certain playbook with the dollar, for example, and especially because, Trump and his, cohort actually would like to see a weaker dollar to support the American economy. So, yes, the dollar may have some short-term impetus, but frankly, you could probably fade that trade, if Trump is elected. And if Trump is not elected, the dollar probably weakens in the shorter term. Corporate credit, as we've mentioned, has just been incredibly strong. And the way that yields are behaving, spreads are historically tight. Is that still an area that you find attractive? Yeah, we've been reducing exposure to corporate credit. Our fixed income team is as light on corporate credit as they've been kind of in this cycle, with a real focus on high quality. And they'd probably stay in that position if there's a Trump victory, with using volatility to add to high quality exposures, because the fundamentals of corporate credit are still great. It's just the pricing is so tight. And if you get a Harris victory, you probably get some opportunities to add to corporate credit as well. All right. Our next guest has some ideas as well. Erik, we'll leave it there. Thanks for your time. Thank you. Erik Knutzen with Neuberger Berman.